Welcome back. Mark Bouris is fed up, angry because he reckons Australians are botching their retirement plans when it doesn't have to be that way.
I'll be honest and I'll say it is frightening for me.
And time's running out.
It makes it very difficult and it makes it very scary.
The clock's ticking and it's scaring the heck out of hard-working men and women. When the clock stops, their retirement and their fears will have to be faced about superannuation or lack of it.
My problem at the moment is a single mum of 3.
That makes it much harder.
It makes it very difficult.
Mark Bouris has been quizzing Aussies like Melissa for months and delivering a blunt message.
We've got to change the way we think about our retirement, and we've got to become a little bit more selfish.
Selfish means looking after number one.
A vast majority of Australians have been allowing themselves to be ripped off with their superannuation for a long, long time. The system just rips them off.
He's talking about a $1 trillion industry that all working Aussies, by law, invest in, but that many know so little about.
The fees are too high, the flexibility is not enough, and the bottom line is most Australians have not got a clue, particularly younger ones, how much money they got for their super, how much they need to retire.
Are we, as a nation, phobic about our super?
I'm in denial about them, I think, at the moment.
I unfortunately take the ostrich approach. I stick my head in the sand, and I think if I just ignore it and forget about it, I don't want to know about it because it'll probably upset me or depress me.
Even if we aren't ostriches, we're fearful.
Unless I take some drastic action now, I'll be up the creek.
Am I going to have enough left?
And will you?
Probably not. Will any of us?
Yes, that's the question. Latest estimates say a couple will need a retirement income of $56,000 a year to live comfortably. To generate that income, they need to have $1 million in super savings. That's a huge, scary mountain of cash.
It is possible. 2 things you've got to make sure of: that the fund or the assets you're investing in, you're aware of and you know how they're performing. 2, the fees that you pay for the privilege of having those assets and or funds managed for you should be as low as possible.
On average, super funds charge 1.5% in management fees, but they can go as high as 3 or even 4. Now, every 1% saving you can make, say for a 35-year-old with a balance of $50,000 already, could mean an extra $100,000 or more at retirement in 30 years. Mark Bouris sees opportunities others miss, and his eagle eye tells him super is ripe for a shake-up. He's launching his own superannuation fund called RetireRight.
It's about taking control. Retiring right is about taking control now. Not when you're 64 or 54, but now when you're 30. And being well and truly aware of this asset that you're earning and is getting put away for you every single week.
Its 2 key features are a very low management fee at 0.75% and a high degree of flexibility, more like a self-managed fund in some ways. From July the 1st, RetireRight investors can buy any of the top 200 Australian shares or term deposits for just the brokerage costs.
We're not suggesting that somebody goes and buys the penny dreadful stocks in the stock exchange. We're saying the top ASX 200 stocks. That's responsible. Term deposits. That's responsible.
So its strongest appeal may be to those in their 30s and 40s who want to choose how their savings are invested but haven't yet saved a lot of super.
People need to make an investment in themselves and back their own intuition and back their own research and start to try things, because if you're just going to sit back all your life and hope that someone's going to deliver to you a comfortable retirement, you're kidding. You will not get there.
The whole process will be website-driven. Whether Mark Bouris and Yellow Brick Road, which by the way Nine Entertainment has a stake in, achieve the shake-up they want will take time to tell. Success in this business, just like the superannuation investments we make, takes years to blossom.
Now time to start. From 30 and on. Don't start looking at it when you're 55. Too late.
If you'd like to look at superannuation in more detail, our website has some useful links. Coming up